Excellent connection. We should be good. Are we good? All right. All right. Good evening, everybody. Welcome to our 2021 Investment Town Hall. So let's talk about markets and your money. I'm going to give everyone a couple of minutes before we get started. It is 7 p.m. Eastern Standard Time. Ready to rock and roll. All right, we're gonna give people about a minute or so before they get in, and then we'll go ahead and get started. It's a lot to cover. I know you guys are excited. I am too. Good evening, everybody. It is January 2nd on a Saturday evening, 7 p.m. You could have been anywhere in the world, but you're here with me. I appreciate that. That's from Jay-Z. Good evening. Good evening. So if you guys have been with us for a while, you know we do the morning note every day on market days at 9 a.m. So probably you guys, most of you guys are morning note, the morning note audience. So appreciate that. If some of you guys are new and you've been following us on Twitter or Instagram, welcome aboard. So as you know, the markets are closed. It is a Saturday night. So all right. So I'm gonna give everyone about another minute or so, and then we'll get started. I know it's a bunch of stuff, so we're just gonna go ahead and just to give you a couple ground rules or a couple things that we'll be going over. This is straight up investing. This is not options talk. This is investing. So no futures talk either. We're just going to talk about what to expect for 2021. What are we looking for? Some of our targets, some of the stocks that we're looking at, and go from there. So as you know, we already put up the top 10 stocks of 2021. Obviously, THCX and Bitcoin are not stocks, but top 10 stocks sounds better than top 10 investment vehicles of 2021. So we'll leave it as that. Make life easier, right? And lately, obviously, since we've had a holiday on Friday for the New Year's and then Christmas, obviously, crypto is open 24 hours. So Bitcoin's been soaring. We're going to report that to you. I guess if you don't like our posts, it's very simple. You can press that unfriend or unlike or unfollow button, whatever the hell it is, and we're gonna report on what we see. It's very simple on the Instagram. If you don't like it, oh well, you know, there's the unfollow button. But the main thing is that a lot of people own crypto. Bitcoin is one of our top 10 of 2021, so we're gonna report from it. Anytime it moves, any up or down, we're gonna let you know. Our Twitter feed is free of charge for everybody. It's not premium or anything. All the news right at your fingertips. What a better way to get all the stuff that we're watching other than Twitter. Twitter is probably my favorite social media to use since it's instant. That's where I get all my news too. So if you don't have a Twitter yet, I highly recommend that you do. And you don't have to follow a million people. You could just follow us if you want, and all the news you can use right at your fingertips. So I'm gonna give everyone about 20 seconds before we start. So good morning. So main thing is that we're gonna talk stocks and investing. Oh, some other commodities too. So but we're gonna talk about investing, not trading. It's very important that we get that because I'm gonna get some questions like, what do you think about trading this or these calls? I'm not gonna answer it. So again, this is investing vehicle. If you have been with us for a while and you're one of those followers that's been with us for a long time, you remember our March investment seminar, our investment town hall. This was during the throes of COVID, and I said, and I recorded it, it's there if you want to watch it. It said, do not sell anything. You don't panic during what's going on with the market. And if you listen to us, you're doing pretty well. So congratulations. If you didn't freak out, congratulations. No one's fighting on the street for food. The world did not end, like I've been saying. COVID, I'm not saying it's over. It's not over, obviously. But again, things are improving from the stock market perspective. But we're going to go over a lot of things. So I'm going to give everyone about 15 minutes before we begin, and we'll go from there. Rock and roll. Yeah, I just finished. My wife made me a drink before I got started. All right, let's go ahead and begin. All right, let's rock. It's 7:05 now. I think everyone has ample time to begin. Good evening, everybody. My name is Carlos Garcia. I'm the founder and CEO of G.A.R Capital. I am your host for tonight's investment town hall. We're here to inform, educate, forecast, and talk about a ton of stuff regarding the markets, investing, what have you. So welcome aboard. Thanks again for stopping by. If you do miss any part of this video, don't worry. It is live. It'll be on demand on YouTube. Feel free to subscribe Turn on notifications, like our videos, really do appreciate it. A lot more great things to come on the YouTube. So again, thank you very much for your support, and I'm glad that you guys are here. So we've had about 111 viewers currently. So I appreciate that. You could be anywhere in the world, but you're here on a Saturday. Appreciate that. Okay, 2021. Well, 2020, what a year. So let's kind of put things in perspective before we begin. So what I'm going to do before we start is we're going to talk about the broader market. The broader market meaning the S&P 500 index. So let's go ahead and bring up the S&P 500 index. And right here we have a 90-year historical chart. This is courtesy of macrotrends.net. Feel free to take a look at that whenever you like. So I went ahead and brought it up here to the 1950s. I don't think anyone here is older than that. So again, from 1950 to 2020, you could see a consistent uptrend, I would say, from about 225.05 to the last closing of 36.21 on the S&P. You could see that is not even updated. The last S&P close was 37.56. So I'm pretty sure if I go ahead and zoom in a little more, I'm sure I can get a little more here. This is incorrect, so let me go ahead and spread it out. On 2020, yeah, 36.21, so they're behind. It's really 37.56, but again, it gives us a little bit more of a perspective. Oh, okay, so they do have it, but again, according to the chart, since it's kind of hard to zoom in, 37.56 is the year close. So let's take a look at 2020 as a whole. 2020 for the year, we could take a look at 5 years. We'll go ahead and adjust it, and you can see 2020 technically was a recession. So what is a recession? Recession is 2 or more quarters of negative GDP growth, which we had in the second quarter and the third quarter. That's where we were. So we did live through a recession, right? That's what we did during COVID. So we hit the low point of around 26.05 in the S&P. Again, my level was, I believe, 2,300 on E-mini futures, which is where we started buying dip there. Again, that was the low point on December, which was right around here, 25.97. So that's where we hit. Again, I go by futures, the S&P. 2018 here was in December 2018, and the low point was March 2020. So a little less than 2 years. So again, we can take a look at historical prices. Again, it's very important to see where we've came from to go for where we are. So 2020, we had an annual gain of 16.26%, which is absolutely crazy in a recession year. 2019, 28.88, again, a better year. 2018, down 6%. Obviously, 2018 in December hurt that when we raised rates from the Fed. 2017 was about 19%, and 2016 was about 9.5%. 2015 was basically flat, a little slightly red. So again, you could see if we go by the annual data, 1, 2, 3, 4. I mean, the last 10 years, we've had 3 of the last 10 years were down years. Actually, if you really want to nitpick it, really 9 out of 10 years were basically green or flat or better. I mean, 2015 was basically flat, and 2011 was basically flat. So that tells you a lot. Again, if you're in a long-term investor, you want to look at the statistics. This is very important. So if we go by the last 20 years, this is the last 2000. So we have 1, 2, 3, 4, 5. Well, count that 4, 5, 6. 6 out of 20 years, the S&P was red. Now, were they crazy red years? Honestly, the biggest decline in the past 20 years was 2008, the housing crisis, down 38%. Now, it did bounce back 23% in 2009, 12% in 2010, flat in 2011, 13% in 2012. So again, we went from in the S&P at the open in 2008 to 1447. It took us another 1, 2, 3, 4 years to get near that, actually, really to 2013, which is about 5 years away, to recoup that level. So you can see in 2008, we did open at 1447. You can see that was the average. This is the open in 2008. And then in order to get there, which we opened in 2013 at 1462. So 1, 2, 3, 4, basically 5 years. So it took 5 years to recoup that loss that we had in 2008. Now, again, if you're a patient person, what you did is you didn't do anything. You basically had your retirement account and you were set. So that's the same thing. Again, a lot of people ask me, "Whoa, when are stocks going to fall?" Well, again, we don't have a crystal ball. That's not how it works. The main thing you have to understand is that when you are shopping for stocks, you're looking for companies that you want to own. You're an investor. Again, if you are a trader, completely different story. But as an investor, the main thing is that you want to look for companies that are quality companies in growing sectors. Now, there's different kind of investors out there. You have growth and you have value. What are value traders or value investors? Values are ones who want income. Again, mostly bonds. They want dividend stocks, which is completely fine. Nothing wrong with that. And more for the younger folks or more for the more aggressive investors like me is they want growth. So growth is important to them. Again, what do we look for investments? What is the reason we invest in stocks? Well, what we want to do is outpace inflation. That's what we want. We want our growth to outpace inflation because the value of the dollar is weakening. No one can deny that. The dollar index right now is at 89.93. So if I can bring up here dollar index historical chart, let's go and bring that up here. Maybe I can bring up here on macro trends, and you could see from 1980 when interest rates were really at its all-time high. This is the stagflation economy during well, after actually Reagan got elected. But again, we had Paul Volcker, who was the Fed chair at the time. In order to combat inflation, had to raise interest rates, which worked. And you could see the high level was around 128. 128 now to around 89.93. So here we are, we're sub 100. So you can see just a downward trend on the dollar index. So what does that tell you? The dollar index, for the most part, again, that's the value of the dollar. How much you're buying things, what's the worth of it? Again, it's worth space less, not worth less. Obviously, you want to get paid in dollars, you want to get paid in fiat for my crypto people. But again, it's important to understand why are stocks going up. Again, what we have, and a lot of people are not saying this, and it's very important to understand, what we have is that asset prices are going up because the dollar value is going down. Very important to understand that. So again, prices are going up because the dollar value is going down. Same thing with Bitcoin, same thing with gold, same thing with silver, same thing with crude oil too. So again, you can see based on this chart just a downward trend. Sure, we had a spike in 2000, but again, because that was when interest rates went up, but you could see just a trend to the downside. From the top of the 1980s, again, the dollar was worth a lot more, 128, versus now at around 89.93. So again, your $20 in 1985 or 84 was worth a hell of a lot more than $20 now in 2021. Again, it's very important to understand the macroeconomic deal with the dollar. Dollars are extremely important. Why is the dollar very important? Well, you got to understand when it comes to the dollar, a lot of companies, multinational companies, do business overseas. A weakening dollar helps exports. Hurts imports. So if you are a company that's importing a lot of goods in order to make technology, it's a little difficult because if your dollar's weakened. Again, dollar's weakened, it costs more. But if you export a lot of goods, an Apple, for example, they export a lot of iPhones, it's better for them. The dollar's cheaper. Very important. Procter & Gamble. There's a reason why those stocks are going up because multinational companies benefit from a weaker dollar. Very important to understand. So we're going to kind of intertwine the weakening dollar and the big thesis of what's going on. So with that being said, I wanted you to have that background of the S&P, where we are. Again, we average about in the last 20 years about 4 or 5 downtrends, right? So again, 15 green, 5 red. Pretty good odds, again, right? Not bad. Again, not saying that the world's, we're never going to have a down year. Of course, that's impossible to say. It's no one can actually predict if something's going to go down or go up. You really don't know. All you're doing for the most part as an investor is really managing risk and probabilities. Anyone who tells you otherwise is lying to you. No one knows. If we knew, man, we'd play the lotto. It'd be a lot easier, right? If you knew the future. Or you get the sports book from Back to the Future. But for the most part, you got to understand that it's all about managing risk. It's all about having probabilities set up. So again, I always say the best traders and the best investors are poker players. It's a fact. It's a fact. So with that being said, let's talk about 2021. What is the big macro policy or big macro thing to think about when it comes to 2021? We survived 2020, right? 2020, March, we're at the lows of the market. Again, I can bring up E-mini futures together and we could start looking at it together. If I can bring this up on my Thinkorswim platform, which is running extremely slow. So let's go and bring up here a daily chart. And you could see on the daily chart, again, I put some Fibonacci levels. Again, this is the throes of the coronavirus crisis will happen. So again, I explained this in March. I'll explain one more time. Why did we fall in March? What happened? A lot of it's fear. So a lot of people were borrowing money, margin, to buy stocks that they thought would never go down. We know that. The problem is that it did go down. So these waves of selling is all margin calls. People having to liquidate their positions in order to raise cash. A lot of people did not have cash on hand. This is why I say constantly, always have cash on hand. 36 months of expenses for your emergency fund, and always have a cash position. Always have something in cash ready for these dips. If you bought stocks around this area, we did, you made some money. You did very well long term. So that's where we are. We're at 37.48, new all-time highs, right? Great to see. Excellent. But if you compare that to the dollar, what has changed from March here to now? The money supply increased. The Fed is printing or electronically making more dollars. The money supply is a lot higher. Let's take a look at that together. Money supply. So it's called the M2 money supply chart. So let's go ahead and bring that up here. I'm going to go and bring that up as together. So let's go ahead and take a look at the good old St. Louis Fed economic research. And you can see, if we do bring it down in 1 year, how much the spike of money has happened since the throes of the coronavirus, which was right around February, right? That's when we started getting the beginning of it. March was at the lows, and you could see how much billions of dollars, and this is in billions, so 1,000 billion is a trillion. So $15 trillion, and we're just increasing. Slight dips, but increasing as we go. We have now added, total money stock, money out there at $19 trillion. That's money. So it's very important that you understand the whole platform of where we are. So we know for a couple of things. Here's the facts that we know. The facts. We have a Federal Reserve that's very accommodative. What is accommodative? Meaning they are helping. They understand that in order for the economy to continue bouncing from where we are, that we do need money. Second thing that's a fact. The stock market is not the economy. Let me repeat that. The stock market is not the economy. The stock market is forward thinking. So again, think of it as kind of spoilers for a movie you really want to watch. Spoiler. The stock market is thinking ahead. It's almost 2, 3, 4 months ahead of the real economy. This is why we're spiking. Again, we're spiking on the hopes of more stimulus, which we got, $600 for checks for everybody, but bailing out for for airlines and stuff like that, fine. Forward thinking that we're going to go ahead and actually get a rebound in economic activity. This is why asset prices are going up. That's a fact. Another fact, the dollar price is going down. When you add supply to something, no matter what it is, Air Jordans, Yeezys, Pokemon cards, baseball cards, gold, jewelry. Give an example. Say you're a big Rolex fan. You love Rolexes. Good luck finding a Submariner if you're like Submariners. I like Submariners too. Good luck going to the store and finding Submariner. They don't make a lot for a reason. They contract the supply, which increases the price based on demand. So you have supply and demand. If you have a lot of demand, very low supply, think of those really cool Jordans that you wanted. Good luck finding the last Jordans that came out. I think they're one with electronic laces, which I wanted to get. Couldn't get them because there's a short supply, extreme demand. Supply is not meeting demand. Bullish Nike, right? So if we have trillions of dollars being printed by the Fed and the demand is pretty stagnant, the demand's kind of stayed the same. A lot of people are not investing. You may think because you're in this video that everyone's investing. There's a lot of uninvested people. There's a lot of cash on the sidelines in money market accounts. Mind you, not everyone is taking the risk the way they are now. We just got out of a year where we had a 34% decrease in the S&P. We did bounce, mind you, but again, a lot of fear out there. So we still don't have that wave of coming together by individuals and institutions, mind you, to buy. So we have that. So that's a fact. A lot of cash on the sidelines. Talked about the Fed being very accommodative. We know this. Stocks are not the economy, mind you. Supply is not meeting demand yet. Demand is not meeting supply yet. So again, a lot of cash. People on the sidelines. And the fifth one that a lot of people don't talk about, I want you to write this down. The letters T-I-N-A. T-I-N-A. What is T-I-N-A? Or you can say Tina. There is no alternative. There is no alternative. Very important you write that down. I'm going to type that again. Tina. Tina. There is no alternative. What does that mean? There is no alternative, meaning try to look. currently right now. Let's have a little fun together. Let's go to bankrate.com. Bankrate.com is a great place to start looking at, basically different rates for credit cards, CDs, whatever. We're going to look at CDs right now. So let's take a look at that. Let's go to banking and let's go to a 5-year CD, 60 months. So best 5-year rates for 2021. The best they have, 0.61%. Not even 1% could you get on a 5-year CD. Let's dive that a little more. So let's take a look at a CD rates chart. Interesting enough, historical rates on CDs, 84 to 2020. Look at that, what you see on your screen. We got as high as 12% on a 5-year CD because money was very scarce at the time. Money was very scarce. What Paul Volcker did during the Reagan administration and the Carter administration was pull back cash, reduce liquidity in the market because inflation was so rampant due to crude oil and a lot of things. But again, pull back money, meaning there's not enough access of money out there. So again, you can see 12% interest rates, all the way down to, what is it now? What did I say? 0.6, not even 1%. So good luck putting $10,000 on a CD for 5 years. This is 5 years. It's BS. It's worthless. So it's pointless. So again, you're losing money if you have cash in the bank. You're literally losing money. So the Federal Reserve has literally created this mandate for you. They've created this mandate by creating there is no alternative, TINA, meaning that the Fed is mandating, pushing you. I talked about this on the podcast regarding why we're bullish. They're pushing people to invest. Why? Because invest spurs growth. Sometimes it does, sometimes it doesn't. But again, a booming stock market does help a lot of industries. That's a fact. So again, TINA, we know that. There is no alternative. Money supplies up. The stock market is forward thinking, meaning that they're expecting that coronavirus is going to subside. The fourth, we have the accommodative Fed, I believe I said. And I believe the fifth thing I said was regarding the weaker dollar. So we know we have all that. So with that being said, are we bullish? Hell damn yes. I am bullish. I've been saying it. I said in August that we would hit 4,000 on the S&P right here. I would say we would hit 4,000 by next August. We are almost there. We're almost at 3,800. Now, does that mean, Carlos, straight shot to the moon? Not that easy. What are the risks? Now we talked about the fun part. What are the risks that could change this whole dynamic? What could create a dip? What could create a pullback? What could hurt the stock market today? A couple of things. Tuesday, we have a Georgia runoff politics. There's a Senate runoff between the Democrats and Republicans for 2 seats in the Senate, So, the Georgia election on Tuesday, very important. Why is it important? 2 seats. If the Democrats win, it's almost like an NFL playoff scenario. If the Democrats win both seats, it will be a 50-50 split in the Senate. Mind you, a 50-50 split in the Senate, who's the tie-breaking vote? Kamala Harris, the Vice President of the United States. Vice President-elect, Now, again, there's no concession between President Trump, but Supreme Court already said that he's going to win. There's no investigation. So we're going to go with the assumption that Biden's going to take Oval Office. I'm not going to get into details, politics, and argue with you guys. We're going to assume that Joe Biden is the president-elect. He will take the oath of office on January 20. If you want to send me hate mail or whatever, fine. But we're just going to do that for this exercise. So, if the Democrats do win, we understand there's a couple things that may help and hinder. Let's talk about the hinder. Runaway spending. We do know that Democrats would love to spend. Now, does that hurt the dollar? Yeah, it hurts the dollar. But Carlos, I thought the dollar going down does help. It does, to a certain extent. You don't want to the point that you're flooding the world full of dollars. It does weaken. But again, yeah, assets prices go up, but inflation goes up. And inflation goes up, inevitably we have to curb it by raising interest rates. So again, all we can do is kick the can down the road. So again, we were spending the last 4 years like maniacs, nothing new. But now with a Democratic Senate, if we got that, the 50-50 split, more than likely you get more stimulus, good thing, but more spending, not good. Again, there's a lot of debt out there. And that debt is owned by us for the most part, but again, it's still debt. But the Federal Reserve and Congress, It's important to build that debt because the actual economy is actually deflationary. It's deflationary for the most part. So we still need that balance. This is why we call economics the boring science. No such thing as hot or cold, too hot, too cold. It has to be just right. So that's really a big risk. The stock market tends to do a lot better, historically speaking, with a split Congress. Democrats the House, Republicans the Senate, Democrats the Senate, Republicans the House. Whatever you want to slice it, usually we get a better uptrend with a split Congress. Again, it keeps people in check. It keeps things in check. You don't want one party controlling everything because they'll just run away with everything both ways. Again, you could be liberal, conservative, whatever you want, but again, it still needs checks and balances. It's very, very crucial. So we don't know who's going to win that election, but again, we'll see some volatility if the Democrats do sweep. You may get a bounce or two based on if we get a stimulus or not, but there's some industries that may benefit from a Senate win with the Democrats. What are some of the benefits? Number one, cannabis. Cannabis. Anything devices, that will probably bounce up. Cannabis maybe will probably bounce. Gambling will bounce. That's important. But a lot of gun stocks will bounce too, because a lot of fear that Democrats will take away guns. Again, that's a whole different ballgame. But again, there's some opportunities if they win. If they lose, let's say they lose both seats and the Republicans take the control of the Senate. Now we know what we're going to get. We're going to get a split House, split Congress, plus Democratic president. Things can be even keel. We're not going to get that much volatility. So that's number one. Number two, what is the biggest risk to this market here? What could cause a 10% correction? Honestly, if you really think about it, it's the money supply. I know I say this over and over. The money supply is extremely important. Every recession we've had is based on two factors: lack of liquidity and interest rates rising. Those are your two. This happened in 2008. Interest rates went up because things were cooking. Real estate got really cheap. Interest rates were very low. And again, we were bouncing back from that tech bubble boom, whatever. And then we cut interest rates and then we started gradually going up. Why do we increase interest rates? To fight inflation. But as we got closer to 2008, 2007, 2008, it started getting to the point of overheated. So the Fed started raising interest rates to curb down inflation. Access to liquidity is extremely crucial, guys. Credit is the lifeblood of the world economy. As long as credit flows, as long as you see in your mailbox pre-approved credit cards, mortgages pre-approved, and this is what I get in my mailbox, it's extremely important for the market to see that access to liquidity being increased. As long as access to liquidity is around, access to credit, which it is, we'll be fine. Bottom line, macroeconomic sense, liquidity and credit are extremely important. We have so much cash out there, literally that much cash. I showed you the breakdown. We'll break down the money supply again. Look how much cash is out there. And the thing is that they really don't print it. But again, the Fed has literally mandated until 2023, they're not going to think about raising rates. That's great. We're going to have a Treasury Secretary in Janet Yellen, who used to be a Fed chair, who is extremely accommodative. This is the Fed chair from 2009 where we got that bounce. A good sign. If things change, if inflation starts creeping up, that's where you get worried. What do you do if inflation starts creeping up? You need to start turning your portfolio slightly from growth into dividends, where you want cash flow. So I want both things to look at. This is very important. When interest rates are low, interest rate low environment, I want you to focus on growth. What are growth? AI, crypto, EV, cannabis is an example. Of course, tech, big cap tech. When things start changing and we start getting quarter points, 50 basis points increase in interest rates, we're going to slowly start going to dividends. What are dividend names? Procter & Gamble, 3M, Coca-Cola, PepsiCo, those Starbucks example, Nike, they pay dividends. You want to stick to those. So always keep cognizant of that you want to start kind of moving the needle. Start selling those growth positions over to dividends. Cash flow is important, especially when interest rates go up because the value of the dollar goes higher. We talked about that. Supply and demand. Extremely important to understand. So that's the risk in the market. Really, could we have a 10% pullback? Absolutely. I am actually counting on it. I think that we will have a 10% pullback this year. Some kind of correction. It has to happen, guys. It's just normal. And that's okay. That's where your opportunity is to start looking at stocks that you want to get. You should start get a notebook, literally get a notepad and start writing down. This is where you start shopping. It's a brand new year. What are 5 names or 10 names or 20 names that you really want to zero in? That you're like, I want to buy these stocks. I want to buy more of these companies, or I want to buy some. This is important. You start writing them down and you start saying, I want to buy this at this level, and and you start putting your alerts. This is where you do your shopping. But as of right now, would you be buying anything? All-time highs? I mean, depends on the stock you want. I wouldn't be adding anything here. The only thing I'll be adding is to my IRA, which is the new year, fiscal year. So again, I have new contributions, so I get to buy some more stock in my IRA, and I have to use it. So there you go. But again, January, new year. Let's talk about January, and then I'll go ahead and answer some questions. I know it's a lot, so here we go. Let's talk about January. I posted this on Instagram. Very interesting point. So let's go ahead and zoom in here, and let me go ahead and spit this out. Let's see here. Let's see. Okay. All right. End of the year rally is bullish. So a 10% S&P 500 index gains in November and December, which we had in 2020, 14%. You can see the January return. 54, 62, 70, 85, 98. We had the same over 10% move. The January return, you can see, was on average of a 3% gain in the S&P in January. Pretty great. So if we kind of did the math and we said, hey, a 3% gain on the S&P, so 10% would be 375 points. So we break that down. You're talking about a 100-point rally. So again, we'd probably get to 3,800 by January. 3,856, 3,900 maybe. Not even 3,800. So again, good January return. The following year return, how about this? So the expectation of 2021 would be around a 18% push. 18%. That'd be better than this last year. Again, keep in mind, we just left a recession. We just literally got out of one, if you think about it, because we had a really great Q3. So you can see, historically speaking, based on recession, this is from Macro Trends. So you can feel free to take a look at it by net. So you can see the recession length, the big push in 2020. This all came down, this bounced. Take a look at the historical chart again. I'll go ahead and move it out. We'll go back to 1950. Each of the shaded areas are your recession years. So let's start going back from 1980. I was born in 1985 personally. So you can see ever since the throes of the bottom of the recession, we went from about 318 points to around 700 points, 750. So double. We had a recession, bounced back to 722, 722 in the 90s, the tech boom, all the way down to around 1837. Now you can consider that the tech boom mixed with the 90s growth. So we went from 748 to around 2000. So almost triple. Then we had a pullback in the 2000s to around 1225. So we cut that almost in half. So a 50% drawdown. And we bounced back again to 1833. We never made back to 2155. Then we came back down to around 901. So again, 2 pretty brutal recessions. And then if you bought stocks at 975 in the S&P, look where you are now. You're at 3,700. That's insane. So you have to think long term. Again, since 1985, the year of my birth, you're talking about 1, 2, 3, 4 drawdowns, including the 5 here. But that's how many years? I'm 35 years old. So you're talking about 5 recessions in 35 years. Would you take that bet? I've always said, bet on America. As I've been saying. And it works. It really has. So again, you can see these are opportunities. Gray areas are opportunities for you. Again, main thing you want to think about. Do you have your emergency fund set? Are you trading on margin? Be careful. Do you have cash on the sidelines ready to pounce? The smart ones have cash on the hand. Very, very important. So we know that January, based on, this is 100% of the time. 100% of the time positive. Does that mean it's a guarantee? No. Again, past performance, whatever, yada, yada. But that's where we are. 100% return every time in January. Again, you can see the moves here. Another thing you're missing on January. I'm very bullish on January. I'm actually very bullish in 2021. We have a lot of people cash on the sidelines. I said that. But again, now we have IRAs, 401ks. People are going to start putting money into their IRA as it's January, New Year. One more thing in the risk I forgot to say. Taxes. If we get a tax raise with Joe Biden, will it affect the stock market? Yes and no. Why do you say yes and no, Carlos? Taxes are bad. The last 2 presidents to raise taxes, Bill Clinton, Barack Obama. Take a look at the stock market then. I can show you again. And it's not a political statement, it's a factual statement. When was President Obama president? He was president in 2009. Oh, look at all those taxes, how much it hurt. Bill Clinton, 1992. Yeah, look how much taxes hurt. There you go. So again, I hear people when they say the tax stuff, I understand what they say. There's no correlation that taxes hurt the stock market. There's no correlation that tax cuts help long term. I like tax cuts, of course, but there's no correlation there. So you need to get that out of your head. What's the most important thing? If I can start balling this up before I answer some questions, what is the most important thing? TINA, the Fed, liquidity. Very important. Money supply, liquidity. Put that together. Can't fight the Fed, and there is no alternative. So write that down. It's very important. What is my target for 2021? 4,000 in the S&P by August is my target. If I had to raise my S&P target for the year, so we'll go back to that setup, and we'll see based on that. I think I have it here. Let's say an 18% gain on average. If I do my percentage calculator, because I'm extremely lazy, bear with me. So an 18% bump from these current levels, 37.56, if we add, that's 676 points. 676 points. It'll be 44.32. I'm going to say 4,400 is our target for the S&P. I'm going to write that down. If you guys want to laugh at me later, fine. 4,400 S&P end of 2021. August, I already have it as 4,000. There you go. I wrote it down. I'll put it on my calendar for you guys. So there you go. There's your breakdown for 2021. What is the hottest growth areas? If the Democrats do win the Senate, cannabis is going to be a huge winner. So we don't know what Georgia's going to do, but we'll see. Second thing, Bitcoin. I know I've been talking about it a lot. Let's bring up the chart real quick before I answer some questions. Why is Bitcoin rising? And I talked about it in the podcast, the top 10. Why is Bitcoin rising? Because of supply and demand. It's extremely crucial you think about these things, guys. Supply and demand. There is not much Bitcoin out there. Institutions are buying. So whatever you got is what you're going to get. The problem is that when it's priced in dollars, there's a limited supply of dollars. There's a finite supply of Bitcoin. So again, it's very important you understand that Bitcoin is extremely volatile. Look at this big red candle on the hourly. And it trades 24 hours a day, 7 days a week. Do not invest in Bitcoin money you are not comfortable to lose at least 50% drawdown. Because it could happen. Absolutely. So it should be a slice of your portfolio, not all of it. Bitcoin is a slice of my portfolio, not all of it. Keep that in mind. It's very important. I don't want you guys just buying something you don't understand. Do your research on Bitcoin. Understand why you're getting in. It's one of our top 10 of 2021, yes. It's very important, guys, to do your research on why you're doing these things. People have asked me about altcoins. Stick to Bitcoin. You'll be fine. Altcoins, do whatever you want. But again, when it comes to Bitcoin, I think it's the bellwether. Stick to the big names. A lot easier. And you'll sleep at night, even though it's trades 24 hours a day. Okay, I'm done with my monologue. Let's answer some questions. Good evening. Okay. Ismail is very, very kind. Good. Carlos is the goat. Frederick says, is it Monday yet? No, not yet. It feels like a Sunday, but it's a Saturday. Crypto. Okay, Jeff is asking, hello, Carlos. What are your thoughts of how the big name companies like Google and Amazon will be affected by the Democratic win in Georgia? Okay, we talked about this again. Google and Amazon. What is it? Google, obviously you have the, what is that called? The antitrust lawsuits. Facebook going through that, all that stuff. We know that. Section 230 hasn't been repealed yet. And it probably won't be repealed with the Democratic Senate, if we do. The fact is that these big tech companies are very, very liberal, and they back Democrats in Congress. It's a fact. So, Democrats are not going to bite the hand that feeds them and helps them. That's where we are. So, whatever. Is it a boon to them? Amazon, not so much, because Democrats are extremely pro-union. Amazon are trying to stay away from pro-union. I highly doubt that'll be affected. I think Amazon has a lot of growth potential. Again, top 10. Again, it's not just a retail store that you see. Oh, the online retail store. They have so many hands in different industries. Now they have Jeff Bezos' company regarding the flight. I forget the name of it. The flight company is not SpaceX. That's Elon's. But again, they also have their stuff too. The big thing, guys, is AWS. AWS is really the crown jewel. That's their big grower. The revenue obviously comes from the store, but Amazon is going to be fine. Their cloud company, let's just say antitrust. They had to split AWS. AWS alone would be a Fortune 100 company. They're an amazing company. well, part of Amazon, and they make a lot of money. That's the #1 cloud company on planet Earth. Second is Microsoft with Azure. So again, Amazon should be bought on any dips, in my opinion. And Google is absolutely bulletproof, I think. It's not a grower the way everyone says, the way it should be. As before, I think it's absolutely underpriced. I own some in the SPY-G ETF. Again, it's not as sexy as the Netflixes and the growth names like an Amazon or an Apple. It just doesn't have that growth. Google and Facebook, amazing, amazing fundamentals, but their growth story is not there. So again, it's been the laggards of the FANG names. What's FANG? Facebook, Amazon, Netflix, and Google. FANG, or Alphabet, you want to call it that. Cool stuff. Let's see. Awesome. Thank you for this. You're welcome. 2021 is your year. Yes. I backed out of my Warzone match. I hope Warzone don't pay the bills. Hello, patience. Yes. I don't know the name. Speculation. I like that. Tina. Yes. I'm cheating on Tina. Okay. CD. Tesla and Bitcoin to the moon. Mike says. Okay. THC sector. Okay. Yasmin's asking, do you believe per NASDAQ that the Bitcoin BTC will rise above 100,000 this year? Now that's a tough one. Can it get to 100,000? I'm racking my brain because I own some, and I'm like, I would love that. But you're talking about a 300% growth in back-to-back years. That's difficult. But I do believe Bitcoin is in the same token or the same year as 2017. And if you were trading or investing in 2017, it was a pretty good year. So that's where we had the halving, new supply, same kind of setback. I'm personally selling one coin at 50,000. Personally, I will take profit at one coin. I'll leave the rest going because it basically gets back my investment. Well, I invested less than that. But again, when it comes to investing and you have something that's a high runner, it's important that you want to take some profit. Again, you want to realize your gains too. Sometimes, if you want to buy something, I just think it'd be best to just take a little something off the top. Totally okay, because if the rest of it goes to zero, hey, I made some money, I'll live. And if it soars a little bit more, oh well, I still have more. I have right now about 3 points. How many do I have in Bitcoin? I have my screenshot here. 3.13 in Bitcoin. And I add every week. I've been saying that. I do it every week on a Thursday. So again, dollar cost averaging. People have asked me, do you still dollar cost average this level? I don't care if it's at $1 million. I'm dollar cost averaging. I want to accumulate as much as I can. So 100,000, is that possible? It's possible. Probability. If I had to give a percentage of probability, 10% or less. I think 50,000 this year. 100,000 is crazy. If it does hit 100,000, I'd be extremely impressed. I doubt it. I doubt it'll get there. Anyways, let's go back. On to Jan, yes. If BTC rallies, holding companies should pay out nicer. When rates go up, aren't bank stops a good idea to rest? Yes, because their margins increase. The thing with banks, keep in mind, I talked about this. Dividends. Remember I talked about the dividend bucket? Guess who pays the most dividends, or usually is a income name or a dividend name? Banks. So again, what are good dividend names? Consumer discretion, consumer goods. Think Kraft Heinz, think PepsiCo, Coca-Cola, what have you, Yum Brands. Banks, JP Morgan, Goldman Sachs, Bank of America, they all pay dividends. Citi pay dividends. There's a reason why they have to return cash to their shareholders. REITs are important too. So again, when interest rates go up, it does hurt it. It does hurt real estate, mind you. But keep in mind that you want to start moving some cash. Again, they say they're not going to increase rates until 2023, but you want to start moving a little bit to the dividend names. Important. TINA. TINA means there is no alternative. It's an acronym. ETF or mutual fund for small cap stocks. Very simple. It is the Russell 2000 Index, or IWM. What percentage of cash on hand would you individual for? Oh, I think I just skipped a bunch of people. Let's go back. Okay. What percentage of cash on hand would you recommend per an individual's income? Thanks. Ooh, okay. You need at least 3 to 6 months of expenses. As long as you have that, I'm cool. If you have a portfolio of $10,000, I would say at least $500 to $1,000 in cash. Have at least 10% in cash. Now, people will say that's a lot of cash to have on hand. Let's say if you're in bigger money. Again, you need to have some cash ready to go to pounce on these opportunities. So 10% in cash is extremely important. Hey, just caught up while I'm at work. There's an alternative. Yep, there you go. What do you think the Fed is going to start moving interest rates? They stated, and this is the Fed chair and everybody, this is 2023. We're in 2021, so 2 more years. What do you think about Square? Any forecast December 2021? Oh, let's take a look at Square. One of our top 10 stocks. of 2021. So let's take a look here at this chart. If I can bring this up, we'll bring up a daily here. Now, let's take a look at some of the reasons why Square is moving up. Square is helping small businesses. They do payroll. They do a lot of small business help with payroll, accepting credit cards, accepting cash. They have it all. So Square has the Cash App. What is Cash App now moving into? Investing. So they're a direct competitor to Robinhood and all these other names. So Square does trades. I don't know if they do free commission. I may be wrong. I think I have it. I don't think they do, but I do have Cash App. Let me see if that is the case. Let me see, let's say buy. Oh, let's see, investing. It is Bitcoin. Oh, stocks. So let's discover a stock. Let's do Nike. Buy 100. Again, I'm just looking to see the cost. Need a little more information to purchase. Okay, I guess I never set up my stuff. Nah. Okay, let's go ahead and look that up. I want to make sure that's very important. Does Cash App offer commission-free trades? Webull zero. Like most brokerages, Cash App investing offers zero commission on stock trades, but doesn't offer options, mutual funds, and other products that are generating still commissions. So it's totally commission free. So that's great. Again, more people coming into the platform. What's good about Square is that, again, they have multiple products. They also have a CEO, the same CEO as Twitter. You know, Jack. Jack Dorsey is the CEO of Square and Twitter. So there could be some integration of Twitter and Square. So there's both growth, both sides. The big thing that Jack Dorsey did was very smart, was that he embraced Bitcoin, he embraced crypto. So again, Square is going up with it. You could see since the beginning of the year from what, $67 to $217. I do see that there's going to be more growth. I think easily 275 on this stock is definitely not of the range of imagination. Next year, would you buy ARKK or AKRG as an investment? ARKK is an ETF. I believe, I forget the name. ARKK. Oh, let me go ahead and bring this up. I forget the name. Heard it many times. This is the ARK Innovation Stock investment. ARK Invest Innovation ETF. What do they invest in? What's their biggest holdings? Well, let's go ahead and break it down together. Tesla, I own it. Roku, I own it. Square, I own it. Spotify, I own it. So again, 10% of their portfolio is Tesla. Another 7% is Roku. I think personally, why don't you just pick and choose what you like? We don't know. I'm going to see here how much now again, their performance is ridiculous. You can see Tesla being a part of it, of course. Now, we want to make sure what is their cost of ownership. How much is the cost to own this thing? Again, very important because these kind of things eat your portfolio. How much does it cost to own? For example, your expenses. So let's take a look at a prospectus together. And this prospectus has to show exactly the cost of each of all the funds. So let's see how much it is together. So you can see here, management fee is 0.75%. It's a horrific no, but again, it does eat up. $930 for 10 years, not terrible. So you're talking about the example invests $10,000 in the fund for periods indicated and assumes a 5% investment annual return. So not the worst thing in the world. I think that's a fine ETF if you want to invest in it. I personally like SPY-G, is a lot lower. And again, I have the S&P, not just tech. But again, I think you can just own Tesla outright, own Roku outright, Square, Teladoc. I like Teladoc. You can own Spotify or one of these names. So if you want to invest in ARK, go for it. It's definitely booming. There's a lot of inflow into it. But I think you could do better picking your names that you like. But if you're the type of person that just wants to invest with Miss Wood, who is the fund manager, totally get it. I'm all right with that. What do you think about NEO stock? I own NEO long term, and I like it. And again, I think a lot of people have told me, hey, do you think it's going to have a Lunken coffee effect with China? And I always respond to them and say, no, look at Battle. I think NEO is in the future with electric vehicles, just in China, just like Tesla's. It's the only EV companies I own is two, NEO and Tesla. I own them long term. Good evening, boss. What are the thoughts on the tech for 2021? AMD, Palantir, love both. I own Palantir. I own AMD. I think tech continues to boom because that's what the growth is. Everyone's like, oh, value stocks are underperforming. They're going to bounce. Really? Why? If you're a dividend company, if you're a company that's paying dividends, mind you, and you saw how much the CDs are paying, what, 0.63? Why are you paying more than 2% on your dividend? Why don't you want to keep the cash and use it to buy back stock as an example? You're not going to get the growth from a General Mills like you're going to get on a Google. You're just not going to get it. Again, when interest rates are low, you're looking for growth. You want to beat inflation. When interest rates are higher, then you want to get dividends, right? Because inflation is being curbed. That's what you want to see. So again, tech is still going to be the leader in the board. If you had to look at different sectors. Let's see here. Hello, Carlos. Can you please set in a buying target for some of your top 10? I have to get over that for a second. So, I mean, it's a lot to go over right now. What do you think of Riot and Mara on Monday? Okay, that's an options question. I'm not going to answer. I'll answer it real quick. If Bitcoin continues to bounce, which we are off this dip, then Riot and Mara are going to soar. What is Riot and Mara? They're cryptocurrency companies. And I do think Riot long-term, Riot and Mara, honestly, I'd rather just buy Bitcoin. That's just me. What are your thoughts on genomic stocks? I have no idea on genome stocks, but again, if they're more of aggressive tech, I can see that. Biotech names, again, I've been saying it before, just like the vaccine, I stick with IBB. IBB just seems to work. Again, it's a combination of all biotech companies, some genome in there. I think that's the best bet. Real useful and educational thanks from the UK. Can I ask your recommendations for brokers and options? Your best bet is Interactive Brokers. And when it comes to learning any books, you just need to, it's like reading a book on how to ride a bike. You just got to do it. And I can't say there's any books that help me, but there's some good books on Wall Street. I can read you one that you can learn the basic stuff. And this is probably my favorite book. And it's right here. A Random Walk Down Wall Street. That's going to give you a lot of the jargon, a lot of the basic stuff that you really need to know. So it's the best book for investors. I highly recommend it. Check them out. A Random Walk Down Wall Street. This is from Burton Malkiel. I'll give you one more book. This is one of my favorites too. This is The Economist's Guide to Investment Strategy. So those are two books I highly recommend. I think when people ask me about books, it's because they've been college students and that's all they know. But there's a difference between learning things in a classroom and actually doing things in real life. You need to be street smart as well. You need to get your knees scraped. You need to get hurt. You need to feel some losses sometimes. It's completely normal. A lot of the things that you want to learn are not taught in classrooms. It's just a fact. You know, you don't get a lot of traders and a lot of investors, big-time investors, teaching universities. You get a lot of economists, a lot of theories, but for the most part, guys who are on the street or guys who actually traded with their own money and have made money, they're not teaching. They're not teaching in University of Temple, for example. But again, if you guys like books and you guys like reading, here's the two that I recommend. It's a Random Walk Down Wall Street and The Guide to Investment Strategy by The Economist. I highly recommend it. Pulling out my savings in investment stocks, 0.5 interest rates, BS. Yes and no. And I thank you for asking that question. If you have a savings account, your emergency fund, it should not be in stocks. 3 to 6 months of expenses, and I can't stress this enough. It needs to be in a savings account. Savings account is not to make you rich. It's there just to hold it. If anything happens, alternator goes out, roof leaks, whatever, unexpected expenses. Sorry, going out to the club is not an emergency. Sorry. That emergency travel to Bahamas is not an emergency. I'm talking about I got a flat tire, something like that. Or you lost your job. You'll be glad that you have it. Leave that in savings. Do not, I cannot stress it enough, do not put it in stocks because you can lose your ass fast. What do you think about holding Disney long term? Love Disney. I own it long term. Hold that thing because they are moving towards streaming. Imagine this. Disney. What is one of their biggest revenues? The parks. Parks are not even fully capacity, right? The theaters, the movies. Not even people are going to the movie theaters. They're streaming now. Disney has changed the game. They're actually adjusting correctly. And yes, the parks will be open one day. They're not going to be closed forever, or they're not going to be half capacity forever. And that's in the case, Disney's going to soar. We're going to get that bounce, continuous bounce on Disney. $200 easy on Disney. Do you think Alibaba might be delisted for NYC? Absolutely not. Will not happen. If you're in the UK Interactive, yep. Hey, Carlos, about some Bitcoin. Might bring some regulation on accepting Bitcoins as services. Can it hit its price? What do you think? Doesn't matter, honestly, because Bitcoin cannot be regulated. Can't. I mean, yes, you'll have some brokers that may be regulated, sure, but think about it. Isn't Coinbase going to be listed as an IPO? Shows how much the government cares about regulating, am I right? If you put it in your wallet, the government can't just take your wallet. It's your cold wallet. So it's very important when you buy Bitcoin or whatever, and you want to move that money when it's available to a cold storage wallet. For example, I use a Trezor wallet, which is USB, plugs in, and it saves your money. Just remember the code. Very important. If not, you're lost. Okay. Let's see. What else we got? There's a lot of questions. Okay, appreciate it. Yep. How will Apple change the fact that they enter the EV field? Very important. I talked about that in the top 10 stocks of 2021. What Apple does is that they're not, a lot of people say they're innovative. They're really not. Apple was not the first company to make a computer. No, it was IBM. IBM made a computer first. Apple's just great at one thing and one thing only. Taking your idea and perfecting it. That's all it is. With brilliant marketing. iPad was not the first tablet. iPod was not the first music player. That'd be Walkman. iPhone was not the first cell phone. That'd be the big tank that you had in the 80s. It wasn't even the first touchscreen phone. I think Palm Pilot was. But what do? They perfect. They're not first, but they perfect. So, is Apple going to be the first EV vehicle? No. But will they perfect it? Looking past at their history on Apple and their innovation and their cash position, how much money they have to spend and burn, I like it. That's why I like Apple long term. That's why my IRA is all Apple. I love Apple to death. I'm a huge Apple fan. I have tons of their products. And yes, I'm a loser. I probably would buy their stupid EV car. Do you ever, Apple for the end of the year, let's see if I can get that number. I think it was, what's his name? I think it was Gene Munster from Loop Ventures said $200 a share. By the end of the year, I'm going to go with $175 a share. I'm going to go $180 on it. $200 a share would be a $3 trillion net valuation. It's pretty big. So I'm going to go $180. You ever exercising options to build your long portfolio? No. If I want to buy stock, I just buy it. How about genomics investing? Do you think is a theme moving forward? If you have a Democratic Congress, that makes sense. But genomes and cloning is a little too close to, abortion, and we don't want that. And I'm not saying me in particular, I'm saying people and politics. The United States is still center right. And genome and cloning, it's a little that break between science and religion, so I'd be extremely careful. You need a populace that seems to be going along with, we still don't even have stem cell research, for God's sake. So again, you imagine where we are. So be careful with genomics, because we're not there as a country yet, society anyways. Would you recommend ARKK on the same level as SPY-G long term? If you want to go for it, yes, I prefer SPY-G personally. Best investments for a Roth IRA. Pretty simple, SPY-G. The gang's all here. Is Babel going to go down from here? No. I think Babel's going to bounce. We actually played options on it. I own the stock long term. If it breaks to 210, I'm buying more. Very simple. I think I love 200, I think. So I think I have an alert here. Let's see, cancel alert. 211, and what's my other alert? 203. So let me cancel this 211 alert. So 203 is my level to buy more. We're at 203, 230, 273. So again, Babel has amazing balance sheet. Their profit margins are absolutely wild. Yes, it's a buy long term. What do you think about NEO? Love NEO long term. Do you see a pullback NASDAQ this year? No. Again, you get a 10% pullback, but not by the end of the year. No. It'll be green this year. Do you recommend exercising options to build your long-term portfolio? If you have the money, I guess, but I think you just buy stocks when you want. Bitcoin thoughts, bullish, been saying it. SpaceX is not a public company yet. If you want to be a part of SpaceX, buy Tesla. Do you use leaps in your portfolio? Depends. Yes, I use long-term options sometimes. I've been burned before. Genome is a future. I've already answered that. Sorry, I posted by mistake. Stocks with potential. Top 10 stocks 2021. Hello next year. How about for the raffle next time? If you, we'll let you know about that stuff. Turn from my sins. Something. Name of the Father, Son, Holy Spirit. There you go. Thanks for that. What are some of the cybersecurity names that you feel is good? CrowdStrike would be your best bet. I wanted to ask about the next raffle for a 6-month options membership. There is no raffle for a 6-month option membership. Let's see. IPOs for 2021. Yep, you have Bumble, Coinbase, Robinhood, I think, and Roblox. I like Roblox, but again, my IPO thing has been the same. It's always been the same. Wait for that first quarterly report before you buy any IPO. If you did buy Snowflake, let's see. If you didn't listen, look at Snowflake. Boop. How about Airbnb? Oh, Can't even bring up the daily. Let's bring up the hourly in Airbnb. Look at that. If you brought out 174, now again, not a horrific pullback, but still, yeah, not great. Not great. So again, wait for that first earnings report before you do any IPO shopping. I got burned with Lyft. Listen to me when it comes to that. Let's see. Do you buy SpyG on an average base? Yes. I buy SpyG every Friday. Any IPO on the watch list for 2021? Roblox is I like, but again, I have to see their books. Palantir Future, love their future long term. I own it. Price target for Blink, end of the year. Blink has a lot of room. I think $100 a share by the end of the year. What do you see BTC correcting? BTC ain't going to correct for at least a year, guys. So you can wait for all the dip that you want. It ain't coming back down. I think the lowest it'll get to is 20,000. Lowest we'll get to. What app do you recommend to buy BTC? I use Coinbase Pro. You ever use options for hedging your long-term holds? Nope. What are your thoughts on TTCF? I don't know what that is. I'd have to do my research on it. I have no idea what that is. Can you give us an Amazon chart? Yep. Amazon chart, looking at long-term, it's a buy. Absolutely. Let's bring up a daily here. And you can see just since July has been just staying ranging. Roblox, where are we? Other IPOs. Robinhood too. Do you use stop losses? I do not. I'm not answering questions on options. DKNG price target end of the year. One of my top 10 of 2021. DKNG will easily, in my opinion, head to 85. Okay. You're welcome, Zachary. Let's see. What's your thoughts on SPACs? SPACs, I mean, everyone asked me about it. I kind of stick to the names that I have, again, because there's some companies that SPACs invest in that don't make money. I like my companies to make money that I invest in. Thoughts on Shopify? Love it long term. Own it. Stocks and QS long term? I had to research a little bit more on QS. I don't know. Can Amazon hit 4K by the end of the year? 4K by the end of the year? Let me do the math. Let me do the math real quick. Oh, let me see if I can bring that up. See, it did gain this past year 60%. 3250. So let's just say it bounced to that. So 60%, 3256 plus 1953 is 5200. So let's say a 30% increase for the year be 976 plus 3256. Yes, I do think that Amazon will break 4,000 this year. Yes, 4,000 this year. Boeing long term, I own it. Own it. It's a great company. You want to own that. Again, just had a little bit of a schneid with the 737 MAX. I don't think it'll get to 349 this year. I think it gets to 349 next year in 2022, but it definitely has some room to run. Breaks 275, it's going to hit 350 and then beyond. But again, things are going to get back to normal, guys. It's not going to happen tomorrow, but things will get back to normal. We're going to wrap it up here. I know it was a lot of information. I had a big monologue talking about what I'm expecting in 2021, but for the most part, you stay bullish, guys. Listen, I saw there was a point that we were going to follow, which is everyone to sell everything. When it comes to telling you this information, guys, you have to understand that we're putting our names on the line here, our company on the line. As the CEO of this company, I don't take that very lightly. I don't tell you guys just to BS you guys and, oh yeah, this is, no man, we need to do research. We have to make sure that we're doing things correctly. It's very important that our namesake, our quality of our brand is still there. We're an honest company. We want to make sure that you know what you're doing. We're not here just to take your money and run. We want to make sure that I cannot tell you something that I personally would not put my money in. I personally can't sell you something that I personally wouldn't buy. I can't do it. So there's one thing that as a commitment since when we started in 2014 to now 2021 is honesty, integrity, and just keeping it real with you guys. Transparency is very important, guys. Yes, guys, losses happen. Yes, volatility happens. But again, I will not recommend something that I personally would not put my hard-earned money into. I just can't do it. So again, Bitcoin, I own it, guys. When I say Bitcoin, I own every stock in that top 10. It's very important to me to have integrity in this company. For my employees, my teammates, I don't even call them employees, my teammates, who are very important to me. They look at this company as a beacon of integrity. And again, it's important long-term to see that we're not going away tomorrow. We're not going away 2022, 2023. We ain't going anywhere. We're here for the long term. We're here to help you guys out. So again, I don't have the view of what's happening tomorrow. I look a little further out. I look to see my investments 5, 10 years. And G.A.R Capital is extremely important to me. It's my blood. It's my name on it. So again, Again, you being a part of this, I expect more growth, of course, in the audience and the replies and the questions, and we ain't going anywhere. So up or down, left or right, we're here to stay, guys. We're gonna help you out as much as we can. So a couple more questions here before we go. It's important that I want to say that disclaimer that, guys, it's very important to understand that I am not going to recommend something that I myself would not put my own money in. I'm not going to do that. And no, I'm not going to show off my wealth and, oh, I have this and, oh, I have that. Look at my car. That ain't helping you guys. That's kind of the pillar that I built on. So yes, do I have cool things? I guess, if you want to call it cool things. Is it gonna help you guys out if I show off what I have? No, it doesn't show off. What's important is news, analysis, information. Keeping you informed is what gets you paid. Showing my cool crap. Oh, my phone is cool. Look at my car. Look at my Lambo. Gives a crap. That's not helping you guys. It puts off the wrong idea. It says, oh, if you join me, you're going to have a Lamborghini. No, that's not what we do here. What's important is to keep you informed. G.A.R Capital is here to inform you so you can make the correct decisions long term. End of discussion. That's it. That's it. Anything else? I don't care about. If it ain't helping you, don't care. That's it. This is why we do the investment seminars. This is why we do the podcast. This is why we do the morning note. Again, to assist you guys, to help you guys long term. Because I know there's a lot of crap out there. Way too the crap to give you the correct information. Very important. All right, guys. We'll leave it there. G.A.R Capital, FX.com is the website. Very, very cool stuff. I'm pumped for 2021. I woke up on January 1st. I went to bed early because I'm old. Me and the wife went to bed early. So I woke up, I sprung out of bed, and I started. One thing I would really, guys, recommend for this year. Get yourself a planner. Get yourself a pen and a planner. Write down your goals. Whether it's physical, relationship goals, being a better person, financial goals, stock goals, anything. Write it down. Extremely important. Write it down. I highly recommend it. If you don't write it down, if you don't have a target, how the hell you know where you're going? You don't have a destination, where are you going to go? You're going to drive around in circles? You're going to shoot in circles? Think about it. You shoot a gun, you need a target. Have a target. And make it a high target. Even if you miss, you're pretty high up there. Very important, guys. 2021, this is your year. I'm very excited for each and every one of you that joined me today, because you guys are going to definitely thanking yourselves for taking the time on a Saturday, January 2nd, on a holiday weekend at 7 p.m. when you can be doing anything else, Call of Duty or bullshitting with friends. You took the time to listen. You took the time to understand that, you know what, this is important. It's important to preview the market. It's important to write down my goals. It's important to understand that planning is important. It's the 5 P's. I want you to write this down. Proper planning prevents piss poor performance. So it's 6 P's. For my military friends, you know what I'm talking about. I'm not from the military, but I'm a huge military fan. I'm a huge Navy SEAL fan. I have friends of mine who are Army, friends of mine who are Marines. My cousin was a sailor. So it was ingrained in me that, again, proper planning prevents piss poor performance. The 6 P's. Remember that. Plan everything you do. It's extremely important, guys. So if you're a vet, thank you so much for taking the time out of your day. Have a great one, guys, and we'll catch you guys later. Thanks again, guys.